Hey, good morning. Let's go over today's trade plan. So in the overnight session, we saw a failure at the recent highs, which resulted in a breakdown below the lows from the last couple of sessions here, down into the overnight low from Sunday night at 75.5. So heading into the open, the sell side is clearly dominant, but our intermediate bias continues to be neutral, and the bigger picture bias continues to be bullish. And because the market failed at the top of balance and then pretty much went straight down through the bottom of the recent 3 days of balancing and into support, it is a bit oversold. And because of that, we're still seeing responsive buyers active at the overnight low from Sunday at 75.5, and we can still get responsive buyers active at the 71.75 to 73.75 initial support. So on the smaller time frame, the sellers are definitely dominant in control, and holding below 80.75 and 83.5 to 85.5 would confirm the short-term bearishness, but we have to keep the bigger picture in mind. And given that the overnight high is 94.5, by the time we come down into 71.75 to 73.75, the market would be pushing a little over 20-point range. And even though that's not a range extreme, responsive buyers can still defend at 71.75 to 73.75. And in the event of a failure at that zone, the market could head lower into 66.75 and the 62 to 64 support area, where responsive buyers are very likely to be active on first test, and that zone does mark a range extreme. Now, so far in the overnight session, we are seeing more than twice the average volume, and we know the average range is around 13 to 14 points lately. So if the volume continues to run at that pace in the RTH session, where we continue to see the market running on twice the average volume, then of course that can result in close to twice the average range. And the 62 to 64 zone would still be a range extreme even if the market runs on double the average volume and hits double the average range. So that's still a spot where buyers can be active, and that's if we get there. Technically, buyers can defend at 71.75 to 73.75, and they can even be active at 66.75. So heading into the open, our short-term bias is bearish. The sell side is in control, but unless we're seeing complete trend down conditions in real time, we have to make sure that we don't get overly bearish on the day time frame, which means that we still have to try to get somewhat good trade location on the short side. We don't want to get so overly aggressive that we start shorting the market at very poor location where there may not really be sufficient reward potential to justify the trade. So on the upside, we'll be watching to see if the sellers can hold ES below the recent 3-day low of 80.75. We have yesterday's low at 81.5. We're going to use 83.5 to 85.5 as the initial resistance zone. If the sellers are going to maintain short-term control, then ideally you want to see the market holding below 83.5 to 85.5. Above that, 87 marks the launching point of the strong directional move that we got in the overnight session. And then we have resistance at 88.5 to 90.5. And finally, 92.5 to 94.5 marks the all-time high. Now, given the weakness that we've seen in the overnight session, we're not expecting the market to retrace all the way back up to the all-time high. And again, if this weakness is really going to continue, then you want to see it holding below initial resistance. But if it pops a little bit higher, sellers can technically still step in at 87 and 88.5 to 90.5. And then as long as the market is holding below 80.75 and below initial resistance, the primary downside objective would be the 71.75 to 73.75 zone. And then from there, we'll have to assess the situation in real time and try to determine how much weakness we're really seeing in real time. We'll also continue to keep an eye on the Russell and see if it breaks below its low from yesterday, which was 66.9. So far, the Russell has not moved down to that area. So we'll be watching to see if the Russell continues to hold above that. If it does, then buyers could still step into the S&P near initial support, and we can still continue to balance within a range. So again, the short-term bias is bearish, but the intermediate continues to be neutral, and the bigger picture continues to be bullish, and we have to keep all of that in mind and not get overly bearish because of this overnight move. So those are the main ideas heading into the open. Let's see if the sell side can hold ES below initial resistance, and let's see what type of response we get at initial support, and we'll take it from there.